Welcome to Daily News Updates by the Shipping Tribune. Here we bring to you the latest maritime daily news in a short-form video format. Please subscribe for regular updates. Freight market scenario by Saigal Seatrade.
The Asia-Pacific Supramax market freight rates were a tick higher on June 16 despite a slow start to the week, with most market participants remaining on the sidelines. The Asia-Pacific Panamax market freight rates firmed on June 16 despite limited trading activity.
GRSC signs contract to build coastal research vessels for GSI. Garden Reach Shipbuilders and Engineers Limited has signed a contract for the construction of 2 coastal research vessels for the Geological Survey of India. According to the Ministry of Defence, the signing of this contract highlights GRSC's expertise in the field of research platforms. The shipyard is currently building an ocean research vessel for the National Centre for Polar and Ocean Research under the Ministry of Earth Sciences, Government of India, and an acoustic research ship for the Naval Physical and Oceanographic Laboratory, an establishment under the Defence Research and Development Organization. Shipping to infra giant Caravel Group takes leading position in Pacific Basin. Indian tycoon Harry Banga's Caravel Group has become the biggest shareholder in Pacific Basin shipping in a major bet on demand for transport of dry bulk commodities. Caravel owned 672.7 million shares in Pacific Basin as of June 12, representing a just over 13% stake in the company as per filings to the Hong Kong Stock Exchange. Caravel disclosed a 7.5% stake in late March and since then has steadily expanded its holdings in Pacific Basin, which has a market capitalization of $1.3 billion. In a statement to Bloomberg News, Caravel Group said it is a committed long-term shareholder and the position reflects the company's confidence in Pacific Basin's future. India's trade deficit narrows to $21.88 billion in May. India's merchandise trade deficit narrowed sharply to $21.88 billion in May, aided by a slowdown in imports along with seasonal improvement in exports, government data released on Monday showed. The trade deficit was lower than the $25 billion expected by economists in a Reuters poll and below April's deficit of $26.42 billion. Moderation in imports led mainly by oil and gold and improvement in exports, which was partly seasonal, helped reduce the trade deficit in May 2025, said Garima Kapoor, economist and executive vice president at Elara Securities. The recent spike in oil prices and global trade uncertainties, including potential US tariff hikes post the 90-day pause ending in July, remain key headwinds to watch out for in the near term, she added. Oil market braces for disruptions as Israel-Iran conflict escalates. As the Israel-Iran conflict shows no sign of abating, oil supply from the Middle East could become vulnerable if the two sides decide to attack vital energy infrastructure in the region, RBC Capital Markets said, warning that energy and oil in particular are now clearly in the crosshairs. The Israeli strikes on Iranian nuclear sites and military leadership at the end of last week escalated with Iran's response with missiles toward Israel, some of which penetrated Israel's Iron Dome missile defense system and hit cities and energy infrastructure. An Iranian missile attack caused damage to the Haifa refinery in Israel over the weekend, prompting a partial shutdown, Israeli media reported. Saving the facility remained operational. Thank you for watching the video. Please hit the like button if you like the video, leave a comment down below and subscribe to the Shipping Tribune YouTube channel if you haven't already.